Let's turn to the earnings. Disney delivering better than expected earnings. The company's streaming business posting a first ever profit alongside a sluggish performance from its theme parks. The stock is down by about 1/3 of 1%. To weigh in on all of this, I'm pleased to say that we can catch up with the Disney CFO, Hugh Johnston. Hugh, it's wonderful to catch up with you, sir. As always, we've got to start with the price increases, first of all. It's on the minds of a lot of people, I can tell you, around this table as well, Hugh. So let's get into it. We've heard from a lot of companies that have talked about a loss of pricing power and sliding sales. What have you seen in the streaming business that gives you confidence that you can hike prices without that delivering increased churn?
Great. Well, good morning. Great to be with you all. Obviously, terrific quarter for us, and you all have mentioned the numbers a few times. The entertainment business is doing exceptionally well right now. We had the top movie in May, June, and July in the form of Planet of the Apes, Inside Out 2, and then now Deadpool. That's real value to the consumer. And as we think forward to what's going to be appearing on the streaming service, those three great motion pictures, the IP that we've produced ourselves, are going to be on the streaming service, as well as an enormous number of Emmy-nominated TV shows, including Abbott Elementary and The Bear, Only Murders in the Building, and of course Shogun, the huge hit. And when you deliver that much value to consumers, consumers are willing to pay a little bit more because, frankly, they're getting so much back in terms of entertainment.
Hugh, I've got to say, I'm with you. Shogun was awesome. I said that last time, just to endorse it once again. One of my favorites of the last 12 months. Clearly, the streaming business is doing well, which opens the door to hike prices. You can't say the same thing about the theme park business. Just what is going on there, Hugh?
Yeah, so one of the things to keep in mind is the theme parks business we have actually grew in the quarter. Revenue was up 2%. So we're not talking about a business that's going negative in terms of growth. Earnings were down a little bit because we had inflation and we're making some investments back in the business. What we see happening more than anything is the lower income consumers are a little bit stressed and shaving a little bit off of their time at the park. And then higher income consumers are tending to travel overseas a little bit more right now. But given the strength of the IP that we have in the park, given the quality of the experience, when the consumer is soft, it tends to hit us late. It hits us a little bit less, and we tend to recover early. So we really just see this as a few quarters of slight perturbation in the numbers. Frankly, I think we're going to be right back as we get into the middle of next year.
Hugh, one of the other complaints you commonly hear with the consumer is about bundles. Not that they're not good, but that there's just too many of them, and it's giving people fatigue. Do you think there needs to be some consolidation? Do you agree that there's just too many options right now?
Well, consumers do seem to appreciate having a limited number of bundles. Now, what we've tried to do with our own offering is offer the individual pieces, or if people want to get a discount by bundling more, we're happy to do that. So that said, I think you do see a trend where there's probably going to be a few big competitors in the marketplace in streaming, as we see right now between Netflix, Amazon, and ourselves. And then there'll be some smaller competitors out there, and they'll have to decide how they're going to run their businesses.
Well, another huge draw of some of these is sports rights. And on this, Hugh, the NBA has had this very odd bidding war where you've come out unscathed, but Warner Bros. Loses out. You have Amazon.com, a new entrance in there. You have all these streamers coming in, trying to get their hands on live sports events. Do you think this is a healthy or unhealthy development for the industry?
You know, generally speaking, what you see is sort of the leagues are choosing to go with the big winners in all of this. So they've obviously been with us. ESPN in the third quarter had 49% market share of sports viewing, which is obviously a terrific number. So we have the A package with the NBA. We'll have the NBA finals for the next 12 years. Beyond that, I'd be speculating as to get into what their decision-making process was. But I think in general, they're quite pleased with what we've been able to do for them. And obviously, we're happy with what they've been able to do for us. And you combine our NBA rights along with college football, along with the NFL, we've locked up sort of the most important sports to us in terms of being big and quite popular for an extended period of time. So we feel good about where we sit.
Hugh, I know there's a different price point, whether or not you want to be an individual that has to sit through advertisements. Are you seeing an uptick of political ads given the season we're in?
No, we really haven't seen much in that regard. So I can't certainly say that.
So you don't, do you expect that to happen? I mean, everyone says after Labor Day, this is when the campaigns are going to be in high gear up until November. Are you expecting an uptick of political ads on any of your streaming services?
Yeah, it's a great question. I couldn't tell you the answer to that one. So what I can tell you more broadly is the advertising market right now is incredibly healthy. We grew advertising as a company 8% in the quarter. Our upfronts for next year were quite successful. The upfronts were up 5%. And in addition to that, the streaming service saw a 20% increase in advertising, and ESPN saw a 17% increase. So generally speaking, the ad market is healthy. The biggest places that it's healthy are consumer and then technology.
Are you concerned that consumers right now potentially are going to shrug off the price increases? Because what we hear from a lot of companies is that we do see consumers trading down. Why do you think they're willing to pay for a higher price point?
Well, I think the biggest reason is it's always important to focus on this. The consumer receives value, and what they pay is price. And because we're delivering so much value, I mean, really an enormous amount of value in terms of the hits that I just mentioned. But then in addition to that, the combination of Disney Plus, Hulu, and then we're going to have an ESPN tile and ultimately ESPN flagship on our streaming service. That's a huge amount of value for consumers. And as they're allocating their entertainment dollars, I think they're going to view us as a great place to put them.
Hugh, you mentioned Hulu. Just how close are we to an agreement with Comcast? Where are we?
Yeah, we're in the middle of an arbitration right now, and as always, I'm not going to comment on arbitration outcomes and all of that. My guess is it's going to take a little while, but ultimately we'll get to a good place for the Walt Disney Company.
Got a decent idea of what the time frame is, Hugh, what a little while is?
Yeah, you're probably talking a matter of a few quarters would be my guess, but that's just a guess, so take it as that.
Well, just a guess as well on the theme parks as well. I just want to nail you down on that too. You talked about the middle of next year for the theme park business to be sort of bouncing back to where it was. The guidance has sort of shifted out, Hugh. What's the firm guidance coming from the company now? Because I remember it was going close to year end, we'd get that bounce. What happened?
Yeah, the consumer came in a little bit softer, and it was really the consumers that I mentioned earlier. The lower-income consumer is choosing to spend a little bit less, and again, the higher-income consumer is doing more overseas and outside the U.S. But again, I'll remind you, we're still growing in that business, so it's not a question of the business has gotten way off track. It's just a little bit softer than it was before because we're seeing toward the end of the quarter, we saw a few consumer trends emerge.
You have quite a unique vantage point, of course, Hugh. I used to talk to you when you were over at Pepsi during the pandemic. Coming out of the pandemic, you're now with Disney. So you have a very, very unique view of where the consumer is. What gives you the confidence just looking at your dashboard that it bounces back, that it comes back? Where does that come from?
More than anything, I do believe there's resilience in the U.S. economy. Obviously, markets are very, very sensitive right now and very fragile, as you all have been talking about in terms of news. But I think the U.S. economy is a little bit stronger than people are giving it credit for, and the consumer will come back as the economy continues to strengthen.
Interesting, Hugh. Appreciate your time. As always, Hugh Johnston there, the Disney CFO, on where the consumer is right now.